Hello everyone and welcome to my channel. So today is Saturday and I will be analyzing the market, the weekly and daily chart in order for me to have a weekly and daily bias for Monday and for the rest of the week. Now, starting with the XY. So, in the XY, what happened? So we formed right here a swing formation, okay, on the weekly chart, and we are pushing higher. Now, while pushing on this week, we got some rejection in this area, okay, and we formed a fair value gap right here. So this is our weekly fair value gap on the US dollar index. And now the weekly, we are in a place at the 50% area of this movement to the downside, and we are in a new month and in a new week. So my overall perspective on the weekly chart is that we have a retracement and we could be pushing lower, but I was anticipating to have a shift in market structure on a higher time frame to go higher on the US index. Now, going into the daily chart, this is the weekly fair value gap, and as you can see, we closed on Friday and we formed a swing high right here. So this is a swing high, this is a swing low, and we need a retracement into a PD array. So as you can see, minimum we should have a retracement, a 50% retracement. Okay, so this is the daily 50% and the weekly 50%. As you can see, the fair value gap covers the 50% on the weekly retracement. Now, this is the daily 50%, this is the weekly fair value gap aligned with the daily order block after we had a momentum to the upside, working into this daily fair value gap. Okay, so everything in blue is weekly and everything in red is daily. We worked into this daily fair value gap, then we started pushing higher into this daily another fair value gap. So now what's happening right here is this is some type of resistance. So there is a swing formation right here, and Monday I'm anticipating price to take the low of this candle and push to the 50% retracement, and it might also go into the weekly fair value gap. This is my analysis on the XY. So Monday I have a bias, so this is my first rule going into the strategy before execution. So this is on the US index. Going into the euro dollar. So euro dollar, we might see the opposite. Okay, so we worked into this fair value gap right here, then we worked into this void, weekly void. Okay, so these are in blue. We pushed higher, we closed all this fair value gap, plus we went into this down close candle. Okay, and we had some rejection into this area going on Monday on this week. So and we created here a weekly fair value gap. So we have this weekly fair value gap, So going into the daily, this is our weekly fair value gap. As you can see on the daily chart, we almost worked into this fair value gap, and we retraced into this daily fair value gap right here, okay, aligned with these down close candles. So this is an order block, okay, so this is a daily order block, and we got rejection from here, and we had a swing formation. So since we had a swing formation, Monday, so tomorrow is Sunday, Monday, I'm anticipating price to take this daily high, okay. So this is my first target, and I'm anticipating also price to get back into the 50% retracement area. So this is the 50% daily retracement area. Also, it's a target since we had a swing formation right here and a swing formation right here. So we kept pushing lower. This is the 50% retracement area of this move. Also, we had some retracement into the fair value gap. Then we kept expanding into this order block and into this fair value gap. And actually, I was trying to take a trade on Wednesday, I think, and it was a loss because I didn't have all my strategy refined, okay. So after I refined my strategy, it could have been a win and approximately 1 to 3 risk to reward ratio, and I didn't have the opportunity to take another trade. So if we go on the execution account, you can clearly see that I tried to take a trade on 2-8, okay. So 2-8 is Wednesday, and it got me into a 1% drawdown. If I wanna recap the trade, this is the trade that I tried to take, and my strategy tells me that the swing formation need to be made above the opening of the hourly candle. So this is the opening of the hourly candle, and the swing formation happened below, okay. So if I'm going down, I need it to happen above. Plus we have the low of this hourly candle not taken by the next hourly candle, so I will be anticipating price to take liquidity from this second hourly candle before we keep pushing lower, and my entry should have been right here if I had my strategy refined. And because I lost this strategy, this trade, I refined my strategy. My first target is at the hourly swing point, so here we have shift, okay, then low, then shift, okay. So this is the hourly swing point, which would have been my first target, and my second target would have been the daily low of the previous day. So as you can see, take 70% at 4.3 and the rest at 6, and I would have made approximately 4% in profit. So now since I have a bias for Monday, I will be trying to execute a trade, and if I have all my rules checked, I will be executing a trade. And actually in this weekend I will try to buy a challenge, okay, with TFT, the funded trader, because I like their podcast, and I like the way that they are expanding in this area and this zone. So I will be trying to buy a challenge today or tomorrow in order for me to start that challenge, since I learned my strategy in my first demo account when I lost it, and I learned my psychology that that I need to have a refined strategy and a checklist in order for me to compromise my losses and my emotions. In this way, I think that I am ready. So I will be trying with a 5k account challenge. So it will cost me approximately $65. So it's fine for me to try it out, but I will be trying to be as disciplined as I can, because I don't want to lose it. And if I am disciplined and I wouldn't win any single trade, it would take me 2.5 months, 2.5 months in order for me to lose the challenge. So this is everything for today. If you see this video and it's beneficial for you, please don't forget to like and subscribe, and see you in the next one.